Well, good morning, Bob.
Good morning, Bill.
This is FNC's Morning View. It's the 1st of October, the start of the fourth quarter of 2012, and really you could label today's discussion potpourri because we're going to talk about the world. Origination, foreclosures, forgiveness, money back, all that.
Well, you know, outside the window right here, we've got clouds and storms and rain, and it looks pretty grim, you know.
That's what we've had in the mortgage business for the last 3 or 4 years.
But in the
sun's coming out, though.
It's coming out out there, maybe not right outside our window, but it's coming out in general. It's we've seen a lot of positive signs over the last several weeks. Last week they announced that new home sales are up fairly significantly. They keep creeping up.
That's good. It's good for the home builders.
Annual rate right now is up to about 373,000 new homes.
That's like way down, but it's still
Way down.
still up.
You know, it's all relative. You know, from the bottom it's up nicely. From the top it's way down.
and so, okay, how long before it all comes back to the good old days, so to speak?
Well, that's a long time, I'm afraid. Right now, at the rate of new home sales, I think there were 141,000 new homes for sale. This is new homes, you know, for sale last month. But at that rate, it's about 4.5 months at the current rate that they're selling. About 4.5 months before that inventory is clear.
So something doesn't compute. You know, we get the one hand and the other hand with economists. We've got interest rates at all-time lows in recent. And when I say all-time lows, I mean in our lifetime.
Well, as long as they've been actually recording. I mean, you know, Freddie announces that every week, and 3.4% for a 30-year with a 0.6 point.
Which is nothing.
It's nothing, and
so affordability is not the issue.
That's absolutely not the issue.
And because basically new buyers are focused on what it takes to make that payment. And so,
Yeah.
so affordability is there. And,
Right.
and so we're starting to see, let's talk about some things that we know. Home prices are stabilizing, maybe up slightly.
Slightly up.
New home sales are up slightly.
Right.
So things are stabilizing. People are starting to be able to rebuild their equity through appreciation, not just prepayment or faster than scheduled repayment, but they're in the form of the home prices are beginning to go up.
Right.
And so it's not affordability, it's not equity buildup. Why don't we get a restart? We don't have the kindling yet for a real restart.
We've had exceptionally low interest rates now for about 3 years.
And it's still been going down to stabilize.
Right, and so a lot of people who were interested in refinancing have done it. You know,
Yeah. In fact, they're looking at doing it again.
Well, refis went up last week, and if it comes down much more, and you know, there's a lot of speculation that the rates are even going to come down more.
Below 3?
Yeah.
For 30 years?
Could be.
What will happen to the refinancing volume? Do you think, well, last week or 2 weeks ago, we talked about constraints in the factory.
Right.
Because we couldn't get the volume through the factory, and so lenders had turned the spigot back, profitability up.
Right. Well, you know, there's been several articles just in the last week about the need to start gearing up, and because they think the rates are going to come down and the volumes are going to go way up. Banks are starting to readjust and restructure to be able to handle this new volume. Mark Zandi just had an article last week from Moody's about how he thinks a lot of the market is going to start turning fairly significantly with the rates kind of continuing to come down. And so things could really go. So we've got prices going up, new home construction going up, existing home sales going up.
Rates down?
Rates are way down and continuing to drop.
So it looks like the sun is about to come out.
Oh, now for a cloud.
Oh, we have a cloud. We have another cloud.
We have a lot.
Now, the rate of homeownership, one last point, the rate of homeownership has been dropping fairly significantly.
Right. And the result of that is that those people are going into rentals, and now we're seeing record rental costs all over the country. Rental prices are going through the roof. And so what does that do? That pushes people toward buying again.
And we may see some new construction in rental units.
Exactly.
It's a
And there
supply
has
demand
been.
issue. You know what you economists teach, supply demand?
Did you forecast that or did you read that, Bill?
Some of you out there, we talked about lower mortgage rates. Some of you out there say, hey, I've been looking at the 10-year Treasury. 10-year Treasury's ticked up a little, maybe 50, as much as 50 basis points, and from some lows. Well, what we're really talking about is the margin, the spread, if you will, between a 30-year mortgage rate and the 10-year Treasury rate. And that spread has been abnormally high over historical levels. One of the reasons that people think long-term mortgage rates are going to come down is that spread is going to erode as competition.
That's the key, competition. Banks are suddenly starting to get real interested in increasing their mortgage volume.
Well, they've got to feed that thing, right?
Right.
They're making
And-
big profits, and so they've got to feed that profit engine.
And so that competition is starting to drive those rates down.
Well,
we're seeing that.
We've been talking about origination. There's a lot of news on the foreclosure front and the free money front. So let's talk about the free money.
Yeah, one of the clouds is how much is still out there in the pipeline on foreclosures. The delinquency is declined now to 6.9%, which is a significant improvement over what it used to be.
6.9. Everything is relative because on prime borrowers, the delinquency rate historically was in the 3% range, 3 to 4%, and the foreclosure 1% or less.
Right. It's unfortunately not down there yet.
So
It's
sort of like new home starts,
right?
right?
The
New home
cloud's
sales.
still there. The number of properties in foreclosure today is 4% of all mortgages.
Just 4 times the norm.
Right. Right now, there are in the 30-day delinquent to 90-day delinquent range. There's 1.9, almost 2 million properties. Okay.
But some of those are going to cure.
Some of those are cured. In the 90 plus, there are 1.5 million properties.
That's not good.
That's not good. And the ones in foreclosure right now, 2 million.
So we're looking roughly at a doubling, give or take, of the foreclosure inventory.
Right. It's about 5.5 million in total.
Well, I thought they were giving out some checks, some money.
Well, there's some problems there, I guess.
Are they giving out money?
They're giving out money. Well, they're giving out credits, okay? And
Not the
basically,
same thing?
the 5 big banks entered into an agreement to get rid of a lot of these lawsuits by the different state and federal governments. So they agreed to pay $25 billion.
That's a good number.
That's a big number and a fine.
That might not be a big number a lot of places, but in Mississippi, that's a big number.
Huge number. But they get a credit. So if they forgive some loans that are delinquent, they get a credit against that $25 billion. So you think they're interested in the
Absolutely. Show me the money.
So this past week, a lot of those letters started going out
I didn't get
saying,
one. Did you get one? Did you get a letter?
I didn't get a letter.
I didn't get one. I didn't get one. But there's more to come, right?
Right.
Okay.
But you've paid off all your houses, Bill. I mean, all 27.
Oh, right.
But what's happened is that they sent out these letters, and a lot of people are getting these letters and not real happy about them because they say, we've forgiven your $28,000 or $147,000 amount that you were delinquent on your mortgage. The trouble is they've already gone through bankruptcy, and that loan is no longer there.
I don't know it anymore.
No, and now they're getting a letter from the bank saying that's been forgiven. And by the way, we sent a copy to the IRS.
So you have some taxable income. Awesome.
So they're not real happy about that. And the banks are saying, look, we've got 2 groups of people, and some of them still owe us money, and some of them have gone through bankruptcy, and those loans are no longer in existence. The people who are still owe them money, they're real happy to get those letters.
Well, that's true, but let's look at it from the bank's perspective for a moment. From the bank's perspective, they had to make this deal. It was a good deal for the banks and their shareholders, and really, it was a good deal for the homeowners because they got forgiveness.
Right.
And the bank did not know who was going to be in bankruptcy and not be in bankruptcy. They really didn't. It also wipes it off the record totally.
Right. I mean, there's still technically a lien on the property. I mean, you could probably go through court process in order when you sell that house and get that all removed, but there is still technically a lien on that property, and by forgiving that loan, even though it's no longer technically a loan, they will get that title cleared up.
Well,
So
one,
that'll
one,
be good.
one of the things about a settlement is it's probably good for everybody, and every party's a little bit upset. That means it's probably about the right settlement. So, because
So when everybody's unhappy, that's
that's
the
probably
right
about the
solution.
right, that's about the right solution, exactly. Well, we're out of time. We'll talk more about this next week. This is FNC's Morning View. I'm Bill Rayburn with Bob Dorsey. We hope your clouds disappear today.
Right.